Traders, welcome to Charts and Coffee. Great to see you all here. Cool little hack I've been doing with my coffee lately. All right, so before I even have my first cup of coffee, I wait 1 hour. No coffee right when you wake up. Instead, and I just finished this here, I get to finish a little bit of, say, a nice magnesium, salty, hydrating drink. It makes the coffee work better. I don't know. I figured out how to supercharge the coffee for myself. So I actually have another little glass of this because preparing for number 2, I put a LMNT, I think it's Element. Put one of those little satchels in the water and it's a little salty. This one was lemon habanero, which may not have mixed with the coffee really well, but hacking the coffee this morning. It does work. It does seem to work really, really well. All right, speaking of hacking, what are we going to do with this pullback that's happening in the broader averages? Let's take a look. A couple really interesting charts on my radar to take a look at before we hop into the questions. And first of all, are we going to pause within this highlighted section of the wave or not? That is a volume-derived area. We have quite a bit of volume in that area. And this is, let me do this here. Let's see if I can't make that volume pop a little bit more. Let's see if we can't change the color of this thing and make it pop. I don't know, would yellow be, oh, that might work. That might work. So I want y'all to see this. And by the way, this is just a study built into TradingView. This is volume profile, which is very different than time-based volume sitting as a histogram at the bottom of your chart. Volume based on price. This is unbelievably powerful once you understand what it's communicating. What it's communicating is opinion. Look at all that opinion in that area. We'll talk a lot more about volume going forward, but look at where we're sitting. Point of control. Let's make that yellow too while we're at it. Point of control. All right, hopefully it's popping more. Whoa, look at that. That's popping. What is that level? That is the most volume we've seen in the S&P 500 futures all year long. You know, we as traders talk about institutions and we talk about all these things that, you know, are happening that would suggest to us whether or not one level or one zone is support, resistance, or more important than the others. Gang, you know, you decode that with volume. Decoding volume is the key, right? Once you've decoded volume, once you understand how to do that, then you realize, oh, all those things that I wanted to know, where's the big money? Where's the quote unquote smart money? Where's the size? Where's the opinion? Where is the conviction? That's it, right? So keep an eye on that. And that's something that's popping up in my head this morning. And then I'm doing the same thing on the dollar, but notice there's nothing there. So that's definitely something on my mind. If you've never thought about that, you definitely want to. And then intraday dollar. By the way, remember, we do have some interesting events at the end of the week. That's Jackson Hole, right? Jackson Hole. So think about where we're landing right now in terms of that timing to Friday, 10 a.m. And if you're looking at the market that way, you're in really good shape. I think you're going to be prepared for what's to come. If you're not, well, stick around. We'll keep talking about this stuff. All right. I love the question. Sarah asks, could I comment on the ZB? Yeah. So this is absolutely going to hit in that same part of the conversation as Jackson Hole, as what's the Federal Reserve going to do next. So when you take a look at the ZB, and thanks for showing the futures, right? This would map to TLT. Take a look. This is our long bond. What is going on? Every day it gets worse. Well, worse for what, right, Sarah? Remember, there's no long really yet in ZB. There's no buy quite yet. because it's not in an uptrend. You notice that we've been neutral since the beginning of July, and we're still neutral. So if you've got the trade flags or you've got the multi-trend, put that up there. Notice that we're still neutral, so we're waiting to find out where oversold is, right? And this is yields, by the way, heading higher, right? These are higher yields. And keep in mind that as yields get higher, that means we're expecting a slightly more hawkish Federal Reserve. As far as ZN goes, same conversation. Gang, structure first, then strategy. ZN looks interesting. It's sitting at a level that we stopped at before. Look at all the Darvish signals in that area. Signal, signal. Here we are again. We're oversold on the stochastic. Not a lot of volume here, but definitely something we can keep an eye on, right, in terms of whether or not we're going to see an oversold bounce. But remember, start with that neutral underlying market trend, because then if we're neutral, there's no expectation of follow through. We know that we're sitting in a market that's sort of not really bullish and not really bearish. Okay, so great question. Thank you, Sarah. Hey there, Karthik. Are we buying this pullback into the NQ? So we have a pullback. We'd like to see the pattern, and until the pattern arises, there's nothing to do. It looks like a minor low is trying to form. Yeah, I'm definitely gonna when I'm with the so my sector secrets folks, we're definitely gonna talk about some of these pullbacks in the last hour of the day, because I'll be with you all in the chat room then. I want to see how the markets perform between now and 3, because the last hour of the day is far more telling than the first hour of the day. Gang, the first hour of the day doesn't necessarily have a high probability of telling us what's going to happen for the rest of the day. If you are looking at longer term positions, it's that last hour of the day you want to take a look at. And I agree, Karthik, we're definitely sinking into a range that is important. It's probably a little sooner than I would like, but let's see how most of the day goes, and I'm going to make that assessment the last hour of the day. The timing is really, really important. Kona, yeah, it's my pleasure. We like to do some market breakdown. I tend to get a little teachy every now and then, but I really want you all empowered to make decisions. And by the way, that's, when I do have the opportunity to email or talk to, people in our sector secrets mastery, they want to know how to do these things. They want a community, and that's why they stick around. We have a great big community there. But the truth of the matter is they want to know. They don't want to be spoon-fed. And that's exactly, why I love this group here in the morning. You want to know. You're willing to put in the work, and you're my kind of people. So I appreciate that. Hey there, Matthew. What do I think the U.S. dollar? Oh, okay. Do I think the U.S. dollar has to start easing before equities can rally? I don't believe that to be true. Matthew, I know a lot of times there's this belief. Let's do this. Questions about the U.S. dollar. But let's do this. Let's squeeze in a bunch. I mean, not now, right? Let's squeeze in a bunch of US dollar. Okay, here we go. Through 2020, 2021, and up to 2022. All right, that's a lot of US dollar, right? Look at the general shape and trend of this market. In fact, since about August of 2021, let's keep that in mind. Someone write that down. August 10, 2021. You can see we've been heading higher. Let's pull up the S&P, shall we? Is there a correlation? What do y'all think? Here's August. Do you think there's a correlation? Or is it that both these markets are keying in on monetary policy? So I hope that makes sense. You might say, Rob, they don't look inversely correlated. They don't really look sympathetically or positively correlated either. What gives? What gives is that both of these, and there's a lot of belief that equities can't rally with a strong dollar. Don't just, take what I tell you at face value. Go look. You'll see there's very little correlation that's consistent between the dollar and equities. What they have in common is monetary policy. So no, I don't believe that the dollar has to weaken in order for equities to rally at all. No, that's not something that gets in the way of what they have in common is that monetary policy. So why would the equity market sort of be weak? And why would the dollar be strong? Believe it or not, and this is going to take me into the tall grass, I'm going to make it really quick. The ECB is changing monetary policy, which affects the US dollar. And the Federal Reserve is changing monetary policy, which also affects the US dollar and affects equities. So they don't talk to each other per se, right? It's all these similar things that affect them both. And that's a very common misconception. You repeat something wrong out there in the financial universe. If you repeat something enough, people just think, "Oh, okay, that's the way that it goes." But you'd be amazed how often when you look for the causation of something, you'll think, "Oh, they weren't correlated to each other at all," right? Thank you very much, Matthew, for the question. And by the way, I do believe the dollar is sitting at very likely an overbought level. Take a look at the daily, you'll see that resistance. How does Fed Chair Powell speaking at Jackson Hole play on the market? So, editor, anytime Powell is going to speak, he is the mouthpiece for the Federal Reserve. He's the only one who's empowered to speak on behalf of the Federal Reserve. Everyone else is just expressing their opinion. When he speaks, he probably, the way that we would perceive that is those are the conversations happening. Those are the decisions that are being made. So anytime he speaks, it's like hearing from the Federal Reserve, really. Jackson Hole is just a very, very public forum for which he can express more of his opinion about inflation, jobs, monetary policy, headwinds, tailwinds, and whatever else is on their mind. We get a glimpse inside the thinking. That's why anytime we have an event where we're going to know a little bit more about monetary policy than we did before, that's going to be a massive event. And this one's scheduled, so we all know it's coming, right? This is scheduled. So the hot zones have to be scheduled. If not, there's no way for the market to discount and prepare, which is much of the movement that we see before a hot zone. All right, Kona asks, I've heard that when day trading, you trade 50 delta, but what are your thoughts on expiry? I don't look at delta at all. I don't look at Greeks at all. I know that makes me sound like a heretic, but Kona, I do not look at the Greeks. That's number one. Number two, to your point though, the way that I do enter options, I've been told, and then I did look for a brief period of time, it does tend to coincide with the 50 delta, but I'm not looking for a 50 delta. Again, don't use Greeks at all. And by the way, you don't have to. It's a cool tool if you like them, but they're not necessary. So what are my thoughts on expiration? If I'm day trading, why would I pay for time I don't need, right? By the way, I don't believe that the expiration itself is a strategy. People say, Raghee, what's your 0 days to expiration strategy? I said, unless you're selling premium where time decay is part of the strategy, if you're getting long calls and long puts, if you're playing directional debits, the days to expiration is not part of the strategy. The days to expiration is part of the cost. It's really not part of the strategy. So I think it's really important for traders who are following anyone else to say, well, if time to expiration matters, then clearly you're collecting credit, you're selling premium because that's part of the game, right? But for me, if I'm day trading, I'm just looking for the nearest expiration. That's it. So no, I don't consider Greeks at all, not even for a second. And those of you that are in the mastery, and how many of you are in here right now say, Rob, yeah, we don't need to speak Greek. We don't even speak it. I don't even like to say theta decay. I'll just say time decay, right? So I think a lot of traders are realizing, oh, I don't have to learn this stuff. When Raghee pulls up her order entry, she's looking at open interest, volume, last bid, and ask. That's it. That's true. And I think a lot of traders will tell you, no, we really don't need it. So thank you for asking. Thank you. I appreciate that. Hey there, Jeff. How does a day trade sell the rip in Tesla look this morning? No rip yet, just watching. Well, we do have the HPMRs for Tesla, so we can take a look at where our time and volatility-based resistance is. So to sell the rip, short the rip, to take advantage of a bounce and get long puts or short into that, I would need a downtrend. So I don't have that yet, Jeff. So without that, nothing really for me to do, right? Nothing for me to do. Thank you. Thank you for the question. I love that you're thinking ahead. So the question you want to ask yourself, and this is the question I ask my Sector Secrets Mastery when we do our day trading Monday through Friday. We get in there at 9:20, and usually one of the first bits on the notes for that day for the crew is, what kind of sentiment are we inheriting into the open? We're inheriting more of a neutral sentiment. into the open? So great question, Jeff. Hey there, Tim. How are you? Are there any signs I look for indices shifting to chop from trend before the multi-trend shifts color? Do I front run my own tools? I do not, my friend. No, my tools are there to read what the market is doing. So no, you're asking me, is there an indicator before the indicator? No, my friend. I usually don't want to get in the habit of trying to front run my own tools. I appreciate the question, but I just trust my gauges, right? I really do just trust my gauges. Are there events? So maybe another way to look at it, Tim, is look at the calendar. Are there events that could upend a trend or give a boost to a non-trending market? I look at the calendar for that. I would not try to have an indicator for the indicator. You know what I mean? All right, next up, Off-Road Bear, smash a like. Oh, let's see. I don't quite follow. Congrats on being C post in the new update of the simpler page. Oh, right. We have updated the homepage. Right. Yes. Yes, we have. I don't think I've seen it. I'll have to take a look. I dive right into the chat rooms. I will take a look. Thank you. All right. We do have a cool, although if I remember right, we do have a quiz of some sort on the homepage now, which is neat. All right. Good morning. Hi, Dustin. While other sectors pull back, how about PSX Phillips for a call? Looking for it to move higher and catch the leaders of XLE. I don't mind playing catch up. Dustin, I'm kind of doing something similar in healthcare. I don't mind looking at a Phillips 66. Let's say you're looking at Marathon and Chevron and Exxon and Halliburton and what have you. And you're wondering, okay, could this thing play catch up? Well, it's really interesting when you look at the XLE, when you look at the OIH, when you look at some of these stocks, there's very few in uptrends. Exxon and Chevron are not in uptrends. So to your point, could it play catch up? Maybe off the 200 propulsion, maybe off the point of control. I don't know that this would be the best example for that. And I would want to exhaust the possibility, Dustin, that when I crack open the XLE, this is a process that we do in the mastery all the time. We take a multi-chart look, we crack it open, we do a relative outperformance scan. It is, frankly, gang, the only kind of scan you need. Take a look at the charts and ask yourself, what's the tide doing? What are the individual boats doing? And which boats are the most bullish? Which boats the most bearish? And which ones are neutral, right? We have a process for that. So until I go through that process, Dustin, I don't really find XLE, setting the world on fire, to be quite frank. I mean, they're going to gap up, obviously, today. These are going to gap up nicely today. Chevron, Exxon. Unless you're already in them, unless you're already in some of these, be careful because they've already bounced off oversold levels. And they're not quite a trend. Now, if they organize into a trend, we can start to buy the dip. Yeah. So, be careful because some of these are going to open pretty strong. And I'm not ever going to encourage traders to buy into an immense amount of strength because you're sort of out on a limb in terms of hoping more traders are coming in behind you to keep that Momo going, which is exactly where a lot of traders get caught, right? They were the high of the day kind of feeling, right? Next up, Stephen asks, how do you trade the point of control? You don't have a strategy around, there's no way to say that the point of control is going to hold. It's the same question as asking, how do we trade support and resistance? Because that's really what it is. It's support and resistance. So it's valuable to know. Gang, for those of you, we kind of started off on talking about volume. If you're not sure where volume is on a chart, there's 4 factors. Most of us know price, and that's it. There's time, there's volatility, and there's volume. So point of control isn't a standalone strategy, but it supercharges other strategies that you're probably already using and oftentimes missing the value of that understanding of size. All right, gang, just like that, my time is up. Thank you as always for being a part of our Caffeinate and Dominate. I'll see you all in the Futures Room and the Sector Secrets Mastery in just a moment. And if you haven't checked out one of those two services, if you want to trade with me, check out what's going on Simpler Futures or my Sector Secrets Mastery. I'm going to go in there right now and start doing some day trading. Be good to each other. I'll see you all tomorrow. Same time, same station.